the word on Wall Street. Everything you need to know today to make decisions on your investments. Joining me right now is Bell Point Chief Strategist David Nelson, Mahoney Asset Management CEO Ken Mahoney, and Ryan Payne back with us. Great to see everybody. First up, another record day for the Nasdaq yesterday. It will not quit, ending in record territory for the 25th time this year as big technology surges amid the coronavirus pandemic. Apple and Amazon leading that rebound yesterday. David, what's your outlook here? Do you want to still buy tech at these levels?
Look, I can understand the concept of buying into the Nasdaq right now. We're at all-time highs, and it made sense to add money to large cap secular growth. But as America goes back to work and as the recovery unfolds, and we always knew that it was going to be stair steps higher, investors are going to want to start to move down the valuation curve, and that's going to point to other areas of the market like industrials, financials, and even consumer discretionary.
So you think we will see then that broadening out?
Unquestionably, because by definition, look at the Nasdaq right now. We're hitting all-time highs, and look at asset managers. Asset managers are paid just like I am, and by definition, if the Nasdaq is moving higher and markets are moving higher, by definition, their revenue is going up. These are companies trading at under 10 times earnings at this point. You've got some stocks in Nasdaq, especially cloud stocks, trading at 1,000 times PE if they have any earnings at all.
Yeah, it's a really good point, David. All right, so let's talk about the 2020 market impact. There is a new warning from Goldman Sachs this morning that mail-in voting delays could slam the markets. Goldman's clients are being advised to hedge market exposure into December. Ken, what's your outlook here? We know that AG Bill Barr said that mail-in voting opens the door to massive fraud, and yet we are expecting some mail-in voting. Now Goldman's saying it's going to delay things, cause a market upset.
It's very possible. We've been giving some thought about that recently as well. I mean, we could wake up the next morning and not have 270 electoral votes for either one of them, and that could start a constitutional crisis. And Marie, we know this. We could always count on Florida for the next morning. We'd be counting Chads. I mean, we could always count on them. Those 29 electoral votes, no doubt, probably would be so tight that we can't declare a winner. And then, of course, if a state is decided because of these votes coming in, these mail votes coming in, there's going to be a lot of opposition to that. There could be court cases and so forth, and it could really unravel. So there really is a risk to investors that we wake up one morning, the morning of November 4th, without a declared winner, and then we're off to the courts. And, of course, 20 years ago, by the way, when we went through this process, Maria, we didn't have the social media. We didn't have all this crazy social unrest. So, they can also light a fuel to everything else that's happening at this point.
Yeah, we know what happens when markets see uncertainty. I mean, come on. All right, let's look at the next potential test for this market, and that is earnings. Earnings are going to begin rolling out in a big way. The second quarter results are rolling out next week. The big banks, as typical, always kick things off. S&P 500 companies are expected to show a decrease in profits of 43.9% from a year earlier. That's according to the analysts polled by Refinitiv. Ryan, what's your take on earnings and how that impacts markets? It's going to begin big time next week.
Yeah, Maria, what I love about analysts is they usually get it wrong. And I think what you're going to see here is more fuel for the upside. I think your biggest risk this summer is you've got that $5 trillion sitting in cash. So many people aren't invested right now. All the economic data has just been phenomenal. And I think that's going to also correlate over to earnings. So, the projections are so dire here that I have to think that, companies are going to beat. I mean, just talking about financials next week. I mean, they're literally borrowing at 0% right now. So I think the number's going to come in better than expected. And I think that if I'm in cash right now, I'd be really, really nervous that I'm not getting invested, because if anything we've seen here is the market's been right, most analysts and strategists have been wrong. So, you have to go with the market's telling you, and that's the economy's getting better and profits are going to come in strong.
Yeah, but does that change, Ryan, if the market starts believing that Joe Biden wins and he brings in people like Elizabeth Warren? You see his economic plan today. Why did he feel the need to come up with an economic plan that was in step with what Bernie Sanders wants? But he did, and they're coming out and talking about what Biden and Bernie Sanders want. I mean, obviously, that's a move to get the Bernie brothers, the Bernie bros, and the progressives to vote for him. But still, he came out with the idea to release a unity policy agenda with Bernie Sanders.
Yeah, those Bernie bros, you got to placate them. I think that's more rhetoric than what's going to happen in reality. And if you look at it statistically, look, economic growth has been the same now for the last 12 years, minus this year, obviously, under Democrats, Republicans. So I wouldn't delay an investment decision because what's going on in Capitol Hill, as Warren Buffett once said. So I think that uncertainty, again, just plays into why equities are such good value here. And I wouldn't let the election distract you. And I think at the end of the day, Biden's more likely a moderate than an extremist.
Ken Mahoney, I don't know if you could say the economy is the same in Republicans or Democrats. You're talking about clearly different policies. Raising taxes, cutting taxes. Raising regulation, cutting regulation.
Look, there's a lot that's going to be said. I don't think we give enough discussion about the Senate. So let's say Biden does win, and it's this blue wave, and then he has the executive branch and legislative branch, the House and the Senate, all in blue. Yeah, he could really go far left and, again, be capital destruction. And same companies that are coming over here could start leaving the U.S., just, the opposite of everything that's happening. I think one of the keys here is actually watching the Senate race. I mean, that'd be a good check and balance. We don't talk a lot about that. We keep talking about the polling, about the president and so forth. But to me, it's that Senate, Senate state Republicans, we have that check and balance, and we could actually moderate. Maybe we have to go up a little bit with taxes, a tad, to pay for this huge $7 trillion we've amassed here. But that's the key to me watching on November 3rd, what's going to happen to the U.S. Senate.
Okay. Yeah, I know that's increasingly becoming an issue on a lot of Wall Street firms talking about where we are in the Senate. Thank you, gentlemen. David Nelson, Ken Mahoney, and Ryan Payne on The Word on Wall Street. We've got a big show this morning coming up this morning.